Ladies and gentlemen, my name is Greg McCloskey from ForexLive.com. This is a Forex quick look at some of the major currency pairs after the better than expected U.S. jobs report. That jobs report saw 263,000 new jobs created. That was higher than the 200,000 expected. The prior month was revised higher as well to 284 from 261. So better growth in jobs. That's a concern for inflation and down the road, and that has sent the stock markets out to the downside sharply, and also the dollar higher. Taking a look at the euro versus U.S. dollar on the daily chart, we fell back below the 50% midpoint of the move down from the 2022 high to the 2022 low. That level comes in at 1.0515, and it's moving below that level is more bearish. We also move below the low prices from November. That the lowest of the low highs, I guess, came in at 1.04798, and that's going to be a close resistance level in trading here this morning for the euro versus U.S. dollar. Stay below that level is more bearish. Let's take a look at the hourly chart. And if we look at the hourly chart here for this currency pair, let's move out here. The 100-hour moving average is the next key target on the downside. That comes in at 1.04135. The 200-hour moving average comes in at 1.03907. We moved above those moving averages on Wednesday's trade here, and came down sort of close to it on Thursday's trade before moving to the upside. So watch those levels on further selling pressure in the euro versus U.S. dollar going forward. Let's take a look at the dollar versus yen, and that moved sharply to the upside here. Off the daily chart, the price moved back above the 200-day moving average of 134.504. We broke below that level earlier today, which was the first time going back to March or February of 2021, I think. So moving back above that level is more bullish here for the, off of the daily chart. At least it's a disappointment that the break did not continue its move to the downside. So that 200-day moving average comes back in play on the downside. If the market should somehow rotate it back to the downside, we will see. The market is also moving, trying to move above the low price that we saw. One of the low prices that we saw on yesterday's trade before breaking lower in the New York session toward the end of the trading day. That comes in at 135.81. If we were to put a Fibonacci retracement from our high price that we saw in trading yesterday or this week to the low price, measuring that out, the 38.2% retracement is being tested at 136 even. So get above that level is more bullish, and then we start to look toward the 136.74 in the dollar versus yen. Let's take a look at the sterling versus U.S. dollar next. And on the daily chart, we are back down, testing the 200-day moving average. Recall from yesterday, the market moved above that 200-day moving average. That was the first break above the moving average since the September of 2021. We moved up to this swing area here, which basically completed the lap of the move down from the July high to the September low, and all the way back to the upside here. So we completed that lap, but we're back down below moving below right now the 200-day moving average at 1.21476. So sellers are back in control in that currency pair. And finally, for the dollar versus Canada, it had pretty much as expected data come out for its employment, although the unemployment rate was lower. We moved above its 100-hour moving average as the U.S. dollar takes more control in this currency pair, and we are the 100-hour moving average will now be resistance or support for this currency pair. We recall from both the last few trading days after breaking below the 100-hour moving average, price found sellers against that level, so moving back above it is more bullish. This level will now be our support level for the dollar versus Can. We don't want to see the price move below that level. So there you have a look at some of the major currency pairs and their technicals after the stronger than expected U.S. jobs report. My name is Greg Michalowski. Good fortune with your trading. Bye-bye.